Ladies and gentlemen, you're watching India Tonight on ET. Now you're joined in by me, Sumita Karira, and my colleague Shibani Gharat. Shibani, tonight the big story. Once again, we focus on the union budget presented by Finance Minister Nirmala Sitharaman. And that budget, remember ladies and gentlemen, that presentation has sparked debate on whether it strikes the right balance between fueling economic growth and maintaining fiscal prudence. Now, on the growth front, the government has prioritized infrastructure-led expansion with a record capital expenditure outlay of 12.2 lakh crore rupees. That's about 3.1% of the GDP. And it marks a significant increase from the previous years as well. Nominal GDP growth is budgeted at around 10%, building on recent trends of approximately 7% real growth. But at the same time, Shibani, fiscal discipline is going to be the priority and how the government essentially maintains that in the year ahead.
Absolutely, Sumita. At the same time, as you mentioned, fiscal discipline remains firmly in the place. The fiscal deficit target has been lowered to 4.3% of GDP from 4.4% in the revised estimates. Analysts, in fact, across the reports describe this as a steady and continuity budget that avoids populist giveaways, focusing instead on structural reforms, public investment and macroeconomic stability amid global uncertainties. Overall, experts widely view the budget as achieving a pragmatic equilibrium, driving sustained growth through capex without compromising fiscal consolidation, reassuring investors and supporting India's economic resilience. To discuss this and more, first we are joined in by Dr. Ashima Goyal. She is ex-RBI monetary policy member, and R. Gandhi, who's a former Deputy Governor of RBI. Welcome to ET now, both of you. Let's just begin with you, Mr. Gandhi. If you can help us understand one simple question. The government has successfully transitioned to a sustainable investment-led growth model, or have we prioritized long-term structural targets at the expense of, immediate market stability and also household consumption? If you can help us understand that.
Yeah, thank you. Yes, the budget, the one distinguishing feature in the budget that I see is medium-term outlook in terms of fiscal policy and government policy relating to growth and other matters. So that is very, very important, because every year fiddling with tax, whether it's a direct tax or indirect tax, that is not good. So that is why they have not made any changes in the tax last year, having given quite a bit of support for the both individuals and businesses. Now this year they have gone for certainty and not fiddling with these matters every now and then. Now, that undermines the confidence of the people. Everybody will start looking at 1 year only, not medium to long term. So that is one. And in all the announcements which the finance minister made during the budget, all relates to medium to long term impact that the policy prescriptions will have. That is what is our focus. That is why, be it support to various subsegments or the chosen focused areas, everywhere the approach is for medium to long term, keeping growth, both medium term growth and long term growth, to reach that efficacy by 2047. So that consistent approach, focus and thrust is towards that. That is what is coming out very clearly. Yes, that's my overall view. Based on your further questions, let me hear.
Right. Right, Mr. Gandhi. So perhaps that's also the explanation for many who are suggesting that there is no one big bang announcement that is present in this budget, because like you stated, that the focus is in the mid and long term. Let me come to you, Ms. Goyal. Now, if we talk about the fiscal deficit that's pegged at 4.4% and now it's projected at 4.3%. The target under the FRBM is 3%. If we talk about fiscal deficit specifically, if we talk about revenue generation, well, that's been more or less static. So is the government indeed on a bold path of fiscal consolidation, as many have claimed?
Yes, they're progressing steadily towards it. So they're balancing many different requirements, such as stimulating the economy. They gave a large amount of tax revenue away to consumers. to stimulate, and we saw the GST and income tax cuts really stimulated consumption last year. So because of that, they have managed, despite that, to meet their fiscal consolidation targets. And debt is also coming down, which had risen during the pandemic. They're balancing each of the different constituents, so not going overboard on a very harsh or steep fiscal consolidation, but balancing, keep sustaining public investment growth, which increases productivity in the economy, generates income, and reduces bottlenecks, while stimulating consumption also. Because one of the things we notice when we look at the data carefully is that the growth in public investment last year was about 6.5%. It was not, they had promised double-digit growth, but the growth was actually somewhat lower. It was still positive and higher than the previous year. But so they balanced it by giving a consumption stimulus. Part of the demand came from the consumption stimulus. And that was also in line with the overall reform strategy of simplifying taxes, reducing loopholes, taxing a larger base, and maintaining fiscal consolidation, but giving demand stimulus from a better consumption of expenditure.
Every budget, the question is, what is in the budget for the Aam Janta, for the common people like us? And this year, the new Income Tax Act 2025, the simplified TCS framework, does it go far enough in boosting household financial savings, according to you, which have recently shown signs of plummeting, Ma'am Goyal? If you can answer that for us.
Yes, I think household savings respond more to income growth than aggregate savings. The other, the interest rate and so on, it affects the allocation to, say, bank deposits or to markets. And so we are seeing a healthy diversification in household saving portfolio, where they are shifting towards different kinds of financial instruments. And overall, even if household savings have decreased somewhat, financial savings, this is because they are taking loans. The household sector in our economy includes unorganized enterprises. So it is these small firms that are taking loans, and that is helping in an increase in production. And corporates, saving has risen from about 3% 10 years ago to 11% now. So corporates are cash rich. So aggregate savings above 30% remains very high in our economy compared to most other economies in the world. And overall, since savings responds to income growth, the various undertaking schemes in the budget to stimulate growth, investment, and they have a very balanced stimulus of both manufacturing, services, and agriculture. And this is diversity is required to deal with the sort of volatile global environment. This is why we were able to sustain our growth the last 3-4 years, despite many external shocks, because we have many different sectors that are doing well. So this budget stimulates, and for employment, you have services, tourism, medical, all of which, AI, which can increase productivity, right? So as incomes rise, household savings will also rise.
Absolutely, and we'll have to see, ma'am, in terms of household savings. But one very important point that you made was essentially about corporate savings as well, corporates having more money. So the question, Mr. Gandhi, is essentially the fact that while the government has been pushing all that it can do in terms of a capex push, and it's consistently increased over the past couple of years, especially post-COVID, but why is private investment lackluster? Why are they so risk-averse, especially when the government is sort of giving them confidence?
Yeah, of course, private capital formation has not been responding to the growth that we have seen consistently over the years. That is primarily because all the businesses take cue from how much of the installed capacity they are actually using, capacity utilization. Because that is what is an important parameter which we find that Reserve Bank surveys consistently have been showing. The capacity utilization survey indicates something around 75% only, right? So that means that across the board, in the industries, there is still capacity full capacity utilization or near full capacity utilization is not happening. So that is why the businesses are not going in a big way about expanding their business. Their capital formation, if whatever is happening, it is not. But last year, there are green shoots. That's what, again, some data clearly indicates that the industries are looking forward, because now that they have, just now as Dr. Goyal mentioned, that they have become cash rich, and now the consistent growth and the possible next year fierce growth also, it should support their view in terms of investing more. That is one. The second reason I would see that by economies becoming more and more of service-oriented economies, almost we are soon we should be reaching 60% of the GDP coming from service sector, and in service sector typically is not capital intensive. Whereas manufacturing sector definitely will require large capital investment, whereas service sector do not require in that kind of scale. So that also is a muted demand, even though the service sector is, the private sector is dominating the service segment, but the capital requirement as compared to manufacturing activity, to that extent is less only. Maybe the economists will have to do a good research in terms of in this kind of changed characteristic of the economy, what kind of capital requirement will be needed. And I think that old standard belief we may have to revisit.
Let's talk about, Mr. Gandhi, the most talked about move of the budget 2026, which is the hike on STT. According to you, was this move a necessary macro-prudential move to curb the speculative excesses, or will it permanently, damage, so to speak, the price discovery mechanism, India's price discovery mechanism, according to you?
This is clearly it is just to curb the speculative tendencies in the F&O segment. That is what has prompted the finance minister to announce increase in the STT for these activities. Because throughout last year, SEBI consistently have been bringing out data and information that large-scale damage in terms of individual exposure to F&O is happening. That clearly indicated that people are being goaded by speculative expectations that needed to be curbed for very safe investment, long-term investment. So opportunities. That is why this has been done. That's about first one. And going forward, your question, second part of the question is going forward, is it going to have long-lasting impact on the market activities? I don't think so. That is not likely to be denting the growth in the exchange-related or capital market-related operations, both by individuals or otherwise. It is unlikely, because it is a transaction-oriented hike. It is not going to be disturbing the price discovery in any way. That is, it is only going to be denting the possible volume of transaction. That will certainly, that is what is the expectation, that is what is the objective also. So to that extent, certain corrections are going to be there, it will be there, but this is not going to be the decider in terms of price discovery.
Right. Mr. Gandhi and Dr. Goyal, we'll have to wrap up this discussion. And thank you very much once again for taking the time out and